So the Bank of Canada has decided to hold the interest rates where they're at. Now, I might have some good news, but mostly bad news in this video because I went through and read the Bank of Canada's monetary policy report. It's a very long read, but there's a lot of useful information. One key thing I will share with everybody though is that based on reading through the report, now I'm thinking if, keyword is if, the Bank of Canada cuts more interest rates, it might only be one more time this year. No more than two, but if they cut, it might only be maybe one more time this year. Right now, the Bank of Canada states that Canada is in a bit of a tricky spot. They're concerned about two things and two scenarios, obviously. One is a economic slowdown where GDP growth slows down, but the other side is also the chances of inflation increasing again. So a lot of us might have thought that the days of inflation are behind us. We don't need to worry about that anymore. Bank of Canada is still concerned about that. Tariffs are inflationary and can lead to the increase of prices of things, so they are concerned. And what did they say will happen if they notice inflation going up again? They will increase rates again. So as a homeowner, maybe if you're renewing your rates this year or next year, something to think about. Or if you're someone who's planning on buying, again, something to think about. The Bank of Canada is very concerned that if they reduce interest rates again and again, and if tariffs stay here for longer than they expect, it could lead to a situation where inflation spirals out of control again. So they do not want that to happen again. So right now, they're keeping interest rates where they're at and just watching what's happening. There's something else which was really interesting in the Bank of Canada's monetary policy report. What they stated is that they believe that the nominal neutral interest rate is between 2.25 and 3.25, and we are right in the middle of it at 2.75. Just to explain what that means, this is what the Bank of Canada is saying, that the idea and theory with the nominal neutral interest rate is that right now they're neither stimulating or growing the economy or trying to slow it down. They're just sitting back and watching how it goes. They believe at the current interest rate, they're not going to try to stimulate and push the economy, and they're not trying to slow or cool it down. They're just sitting in the middle and watching everything that happened. Inflation in March was at 2.3%, which is about where the Bank of Canada wants to see it at. So if inflation stays around the 2% target, if the economy doesn't slow down unnecessarily, and as long as these tariffs don't affect the economy in the sense of causing inflation again, that could theoretically mean we're not getting rate cuts again for a while. Obviously, this is the Bank of Canada's position as of today. Next week, next month, 2 months from now, we can be in a totally different situation and they can completely change what they want to do at that point. As always, I'll keep on updating you with the latest information on this. But as of right now, we're in the nominal neutral interest rate. The Bank of Canada is okay where we're at right now, and they're going to adjust as they see things change.